Since the dawn of time, gold has been a symbol of wealth, beauty, success, and gangster bling the world over. And among investors these days, it's also been a very hot topic. In 2019, the price of gold rose by more than 30%, and some analysts, plus some people who think a recession is coming, think it has further to run yet. But for all that talk, how do you actually invest in gold? Well, in this video, we're going to explain why gold matters, the many ways you can invest, and some of the risks involved. Gold is one of the oldest forms of currencies, with coins dating as far back as 800 BC. And up until pretty recently, it was still used as the global standard for trade. That all became a bit shaky around World War I, but it wasn't until 1970 that the gold standard officially ended. Now we have the fiat or paper standard, which is issued by the central banks and most commonly carried around in your pocket as cash. But when these currencies start to fail us, because of hyperinflation, underinflation, recessions, or stock market crashes, it's historically been gold that we fall back on. Which is why the price of gold tends to go up when economies start to perform poorly, or when grandma starts getting nervous again about the state of the world. In the last couple of years, we've been moving through a period of global economic uncertainty, thanks to the US-China trade war, unrest in the Middle East, and changing power dynamics around the world. Because of this, the central banks have us sitting at record low interest rates. This is why gold has reappeared as a hot commodity. And if interest rates continue dropping, even into negative rate territory, well, gold could become a lot more important. So how do you invest in it? Well, there are two main ways that you can put your money into gold. You can buy physical gold, or you can invest in gold via the stock market. Physical gold is where you actually own the gold, as in you can hold it, or wear it, or store it in a safe. The benefit of this is that you own something tangible, which can make it less risky than investing in something like stocks, where if it all goes to hell, you're left with nothing more than a piece of paper in your hand. I mean, if the price of gold goes down, and the least you can get yourself a nice pair of earrings out of it. The most common forms of physical gold people usually invest in are gold bars, aka bullion, gold coins, and of course there's jewelry. If you're a serious investor though, you'll get the best price for gold in its bar form. Meanwhile, coins and jewelry are given as gifts for special occasions like a wedding or a Chinese New Year. Finally, you have what's called unallocated gold investing, where it's still physical but it's not in your hands. Instead, you're investing in a dealer's pool of gold, so really it's more like a contract. You'll never get to handle any of the gold, and it can be a little riskier too. But how do you buy it? Well, you can literally walk into a bullion dealer and walk away with gold in your hand. Or you can buy it online and have the gold delivered to you or stored in a vault until it comes time to sell, and there are costs there too. There are even a few apps out there now that let you trade gold on your phone. Just remember, no matter how you're buying physical gold, make sure it's an authorized dealer. Because yeah, fool's gold is still a thing. The other way to invest in gold is over the stock market, and there's a few ways to do this. Number one, you can buy gold stocks. That's where you invest in a company that has gold exposure, like a mining company. It's not always easy to pick the right company, but as a general rule of thumb, companies with strong gold exposure will see stock prices go up when gold prices go up. But if stock picking isn't for you, you can also invest in a gold-themed exchange-traded fund, which is a listed fund that is made up of multiple gold companies, or which tracks the price of gold. And if you want to learn more about exchange-traded funds, I actually just did a video on that, so check it out in the link below. If you're feeling especially brave, you can invest in gold through the futures market. Futures traders look to profit from price movements, so they can still profit whether prices are rising or falling. However, because futures contracts can be highly complex, derivative products, this is better suited to more advanced traders. Remember, with the stock market, you're not actually owning physical gold, so you're exposed to all the usual risks that the stock market carries, such as stock market volatility, company bankruptcy, and the possibility of losing your investment entirely. Alright, so here's why you might want to invest in gold. Number one, to make money from it. When gold prices go up, so does your wealth. Number two, to protect your wealth. Whether you believe a recession is coming or not, gold has historically been a safe bet for your money. Number three, it's liquid. It's easy to convert into cash. And fourth, on the sentimental side, it can also be a terrific gift that is also an investment. So what are some of the downsides? Well, low risk, low reward. As is often the case, this means your returns over a long time frame might be lower than with other kinds of investments like stocks. Ongoing costs. If you're buying physical gold, there are fees to consider, such as dealer fees and storage and insurance costs. Number three, there's no income. Unlike owning property which generates rent or shares which can pay dividends, physical gold won't earn you any income until you sell it. Lastly, price volatility. If you're investing in gold via the stock market, it comes with the same risks you normally get in stock market investing. That is, you risk losing your money altogether. Just because you're investing in a gold stock doesn't mean it's a safe investment, so do your homework. So whether you think a recession is just around the corner or you want to diversify your stock portfolio, gold could be a great asset to consider investing in, but as with any investment, it's not for everyone. So what do you think? Do you think gold is a good investment? And what's your flavor of choice? Let us know in the comments below. There's a lot more to it than what I've gone through. So if you want to know more about gold investing or how to invest in shares or ETFs, you can visit finder.com.au and the links are in the description below. Thanks for watching, I'll see you next time.